Very good afternoon, everyone, and welcome to today's uLaw webinar. The title for today's webinar is Trust and General Reconciliation Demystified. This particular webinar has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. And you are able to use this title once you log into your individual Law Society portals to be able to get your 1 hour of professionalism CPD credits. Now, if you need more CPD credits for the completion of the year, we do encourage you to visit our YouTube channel, and under the webinars channel, you should be able to find other CPD sessions that we have conducted over this past year, and we had close to about 15 to 20 CPD sessions throughout this year that you're able to review and make that part of your CPD accreditation as well. Today's webinar is also the last webinar for this year, for the calendar year, and we certainly look forward to your continued support in the new year as well. All right, moving into today's agenda, like every other uLaw webinar, this webinar has this very specific agenda. We're going to talk about the reconciliation process, specifically highlight the trust and the general reconciliation, the tasks behind the reconciliation process, as well as the tasks that you must have taken care of prior to coming to this reconciliation process. So making sure that the appropriate data for the work that you've put in throughout a month or a year has been entered into a system or some system of record, whether it's automated or manual process, for either yourself, someone who's helping you with the reconciliation process, like a bookkeeper or an accountant, or a system that can, like a legal accounting system that can actually do this for you. The fundamental bottom line is that you have done due diligence data entry ahead of time so that the reconciliation process becomes easier. And it's easier to also understand the ones that you've missed out on so that you can now go catch up. Okay, so really talking about what does it take to be audit ready. So reconciliation becomes one of the important documents that is being requested during a Law Society audit. And it's recommended that you would have at least a monthly reconciliation cycle, so at least one document a month for a term that you can decide, whether it's the 30th, 31st, 23rd, so you decide on a certain closure date or term for that time period or cycle, and you generate the reconciliation up till that date. Okay, so if you're doing this on a monthly basis, then you should expect to have maybe around 12 documents. That makes it very prudent, and the auditors would love that you're disciplined enough to have those documents available when you're being asked to present them. As we come to the, as I mentioned, calendar year end, another important aspect is also going through other documents that you may be asked as part of that audit. So we'll kind of give you a quick checklist, if you will, of things that you should keep in mind as you enter this new year of 2022. And if you're going to be audited or haven't been audited yet, a quick laundry list of things that you should keep in mind, and maybe prepare yourself over the holidays to have these documents readily available so that you're prepared if and when that audit arises. Okay? And of course, time permitting, we're going to spend about 5 to 10 minutes walking you through a live demonstration utilizing uLawPractice as an example legal accounting system on how you may go about the reconciliation process. Now we want to highlight very quick a bit of history in terms of how accounting systems have evolved over several years. I have run this webinar and other sessions where we do highlight this particular slide. So starting with, manual entries prior to having system of records, any automation with products or things of that nature, the legal business has existed and has done well. It was just the amount of time and effort that was spent in doing this was probably a little more laborious than today, or the opportunity to automate is probably a bit more higher today than before. But we've evolved from a manual double entry system, which is pretty simple but very time consuming, can lead to a lot of human error, especially around mathematics or arithmetics, for lack of a better term, because you're now looking at ledgers and journals that add or subtract numbers, reconciliation processes that may lead to such issues. So from that manual double entry type of system, through the years, it has evolved to make it easier on the practitioners to be able to get them right. So first, having the precision in the data, and then over a period of time working towards reducing the amount of time that is spent in generating these documents on a need basis. Okay, so the spreadsheet software is something that's still very highly prevalent in the market. Gives you a lot of the power of automation in terms of calculations, simple to understand, but it's still not a full-fledged legal accounting system, right? It still needs a certain amount of nuance to give you the information you need from a legal accounting perspective. And it's evolved to general accounting software. And when I talk about legal accounting, I'm also specifically highlighting the specific needs and requirements of the trust account. Okay? So legal accounting softwares are purpose-built in many ways to help, I guess, demystify the whole trust accounting principles of ledgers, journals, the way you enter data, and business rules that surround that. And finally, coming to legal accounting software, and we're at a point where we're looking at artificial intelligence, we're looking at automation, we're looking at speech-based automation as well. So gone are the days where you're going to have to enter information. I think we're entering a new year, 2022 and beyond, where we're starting to see sophistication to the point where you can actually speak to your software and say that I've just generated an invoice, ledger this, or to really talk to the system rather than having to enter the data in, right? That's kind of the next evolution, and that's what you should expect as some of the conveniences that these systems can offer you moving forward. But bottom line, all that's nice and fancy, but the ledgers and journals still remain to be the same because these are now compliance-based documents that are expected in a very certain format. So no matter how sophisticated your system is and how you actually enter data into that system, what you're being reviewed against is the sanity of the document that you produce on a need basis for these audits, and the templatization of those documents have evolved over time, but haven't drastically changed to a point where it needs certain level of sophistication. The documentation and the template and the information that's being captured is sophisticated, but how it's being represented is still very much a compliant-based requirement. Okay? So understanding the accounting system is really the type of help you can get yourselves today compared to before in entering the data into a system of record. Now we move on to really understanding the reconciliation process. We start with the trust reconciliation. So the reconciliation process, if I were to try and explain this, and I know in many ways I'm preaching to the choir, you probably already know this. You're just trying to understand how certain systems can make it easier for you. But for those who have just graduated, who are joining us, who are just getting started with their business, this is a process where you yourself are able to validate all of the financial transactions that have occurred within your business that have certainly touched your financial institution's database. So let's say you are working with a financial institution such as a bank or credit union who manage your trust account. Every time money comes into this trust account, every time money leaves the trust account, consider those to be financial transactions that are touching that trust account. Now, the Law Society needs you to provide a record of transactions coming in, transactions going out, and really a summary of what your balance in that trust account is and how it is being accounted for. Because into this trust account, it's not specifically built for a single client. It's a pooled trust account or a mixed trust account, and hence this is now retainer money or money for real estate transactions coming in. Could be various different reasons, right? Could be payouts. Whatever the reason is for a specific client's matter, money coming into the trust account needs to be accounted for. Now, every time you write a trust disbursement, every time you do a payout from trust, every time you refund a retainer, every time money leaves that trust account, depending on the situation, now the Law Society needs you to account for that particular money leaving out against a client's matter. So it's not just a random $3,000 leaving the trust account. It is now tagged along with a specific purpose, a client, and a client's matter. Now, after the pluses and minuses, all the additions and subtractions have occurred in that particular bank account, the Law Society, in that date range as we talk about, as on a specific date, want you to produce this report that highlights the money coming in, leaving, as well as any outstanding deposits or bank errors that may occur during that term. So maybe there are certain deposits that you've not yet deposited or has not yet reflected, or maybe you have now cut a check, but that has still not reflected in the bank account. So you want to manage those components. So you plus and minus all of that. And the bottom line is this. You need to produce a client trust listing, a very important subsection of that trust reconciliation process that highlights each and every file with the customer information, the last activity date, which is very critical because we want to understand when was the last time that there was a financial transaction in that particular matter. Because there are certain policies associated with how long you can keep your client's money in trust, right? Because the Law Society does talk about you having to constantly look at that term, and if a specific term has crossed over, then you have the responsibility to send a letter with a refund of that retainer or whatever that money is with that client's name against it. And last but not the least, the amount that's left against that particular client's file. Because the total of all the balances individually divided against the client is what pretty much leaves you with the reconciled trust bank balance. So that's really the balance. It's just a summary of the balances from all clients. The reconciliation process is now comparing the information that your bank produces. So let's say that is the source of truth, because really money coming in and leaving is related and is already kind of etched in your bank statement. So when you get your bank statements, whether it's digital or through paper, that information is available. What is the bank balance, right? But the bank does not give information as to the trust listing, and that's why you need a system of record for yourself, for your own purposes, to write down and ledger, just really taking note of all these financial transactions so that you can clearly articulate in this trust listing which money was spent for what, so on and so forth, specific to a file, so that you can finally come down to this subsection of the file, activity date, and the amount left. And now the reconciliation process is now comparing what the bank has produced as part of its bank statement with what you have internally recorded as part of your system of records ledgering process. Okay, sometimes the bank and your own internal systems record keeping may vary. I think we looked at a few examples. A quick example that I can talk about is outstanding deposit. So imagine the situation where you have received a retainer from your client as a check, you right away write that down. Being a disciplined practitioner, you write that down in your system of record. You maybe enter it into your legal accounting system, maybe into an Excel sheet, so that you're right away writing it down as your memory serves. But that check now continues to stay in your drawer or in your pocket, your wallet, your purse, and you now forgot to deposit that into your financial institution. Okay, it has happened, it continues to happen. That's why we sometimes talk about having electronic modes of payments. And there's a certain, this is more prevalent when you get retainers in the form of cash. And more important at that, because you have 24 hours before you can deposit the cash retainers into the trust account. Okay? Nevertheless, whether it's cash or otherwise, let's say you've forgotten to deposit it into your financial institution, and if you're just coming to the end of the month and you totally forgot about it, when you do the reconciliation process, let's assume that check was for $1,000. What you should notice is your system of record will show $1,000 because you've already accounted for, because you said, I got the $1,000 from this particular client, Peter Piper. But your bank will have $1,000 less because you did not deposit the check, and hence the bank will not have deposited that money into your account. Okay, so that's a classic example, and the reverse holds true as well. You've got the $1,000 check, you're great business personnel, you ran to the bank, deposit that check. Maybe you want to wait for it to be reported back, and you've not yet written it down into your system of record. So at the end of the reconciliation process, you will find the bank to show $1,000 more than what you've accounted for in your system of record. Either way, the reconciliation process is that first step through which you can recognize if there is any disparity in the monies that reflected in your bank statement compared to your own system of record. Whether you do it for your trust account or your general account, this is the bottom line of you comparing the two systems. Being aware of the reasons for the differences, if any, and then notifying through this document what those reasons are and the amount. And that's why you have the outstanding deposits, outstanding checks, plus any bank errors. You can clearly see in this example, it says check 003 was cleared at $687 instead of $678. And hence, there's a $9 difference because there was an error made by the bank. Of course, this is an example from way before, but a good example can also be if, for whatever reason, your financial institution, your bank, let's say, takes away a service fee from your trust account. That's another classic example. Then you have to go and notify them that they remove that bank fee from your general account, right? So if you can catch the reconciliation process ahead of time, not wait for it till the end of the month, just for your own operational conveniences, it would go a long way. And we recommend at least reviewing your bank statement against your own system of record on a weekly basis so that you're caught up at the end of the month and just generate a single document very confidently knowing what's happened the past 3 or 4 weeks. And if there are any errors over that week, it's easier for you to correct them, it's easier for you to reflect them, and totally be on top of the numbers rather than having to scamper at the last time or the last minute when you do this at the end of the month. As part of the reporting, which is really the reconciliation report, there are 4 important steps when it comes to the trust reconciliation report. As I mentioned before, step 1 is really first documenting the balance as per your bank statement. So what does your bank say is the statement balance as of that particular date? Then comes these anomalies we spoke about. Are there any outstanding checks? Are there any outstanding deposits? Right? So one is that you forgot to deposit a check into your bank. The other is, let's say money has left your bank. You've written a trust, or let's say a refund of a retainer. Maybe there was $200 left in that retainer amount and you refunded that. And let's say your client has yet to deposit that check. Then now you have to now have the responsibility of follow up, send them an email saying, hey, please deposit that check, because till they do that, your bank is always going to show $200 more. And if you record it in your system record, that's going to show $200 less. Okay? So your outstanding deposits, your checks, bank errors, so that's step one. So that pretty much gives you what's called as the trust bank balance. Okay? Now comes step two, which is now outlining those outstanding checks. Okay, perfect. There are some outstanding checks. So what are those? Step three, which is very critical, and this also is an important side document called the client's trust listing. That's a document in itself, but it forms a part of the reconciliation report to justify the total trust balance. But it's a client trust listing is a document by itself, and sometimes during an audit you may be asked for it. And this is something that financial institution is not going to create for you, and hence you need a system record or some way of maintaining this for yourself, for your own firm. And that is the file name, the last activity date, and the balance or the amount balance against that file. If there are two matters for the same client, then you show that as part of this section as well. And the step four, which is common across both trust and general, is the comparison between the financial institution's bank or the bank's balance and comparing that with what's called as the unexpended balances per the client's trust ledger. And that is your own system record. It's just a fancy long statement for your own system record trust ledger. Okay, so 4 steps in creating your trust reconciliation report. Whether you do this manually, semi-automated, use a legal accounting system, they all will need these 4 sections. And if I were to compare that with the reconciliation of the general account, or sometimes called as the operating account, you have 1 step less. So what you don't see here is the client trust listing, and you don't have a room or need for it within your general reconciliation. But the first step of you needing the bank balance remains to be the same. Any outstanding withdrawals or payments remains to be the same, right? And the step 2 is outlining what those outstanding withdrawals or payments are. Third step is the comparison. Okay? Now, often we find that there's a lot of emphasis provided towards the trust reconciliation, and rightfully so, because auditors are very keen to look for any anomalies or errors within your trust account, because this is very sensitive money being paid in advance. Hence, it's important that you don't misappropriate it knowingly or unknowingly, showing that you make corrections. So there's a lot of emphasis put towards scrutinization of your trust account. But in the same token, what happens is sometimes the amount of effort and stringent thought process given towards trust account sometimes is not applied to your operating account, because that's kind of your zone, if you will. But it's still an important Law Society audit document, the General Reconciliation Report. Even if it's not given sometimes the same amount of importance as trust, we highly recommend that if you've got a good system of record, a good process, and a discipline to go about the trust reconciliation, that you can very simply apply it to the general reconciliation process as well. And what you get out of it, yes, you're all very ready to provide that as part of your audit process, whether you're being asked for it or not, right? But the bigger bang for buck for you doing your general reconciliation is when you reconcile on a monthly basis, you can be very confident about the profit and loss of your business. Okay, what's left in your trust account does not directly relate to the revenue that you generate for your business. Because every time you draw money out of trust, it needs to be moved into your general account to reflect the revenue coming into your business. And when money comes into your business and when you're spending money for your expenses to run your legal life, that accounts for the P&L. It's not the money in your trust account, because that's your client's money, and unless you have put in the effort to show for, you're still not able to recognize that revenue. And so general reconciliation is not only a law society document, but is more probably in many ways important from your own business hygiene perspective, so that you can be very confident about your revenue, your expense, and hence your P&L at the end of each term. Also gives you an opportunity to reflect upon the data. So if you find that you're at a loss, let's say every month, then you may be able to have a deeper dive and really understand the numbers. Maybe the expenses are more, then you can further divide what those expenses look like. How are they spread across different categories? Maybe reducing rent, looking for cheaper plans for your phones. Things of that nature can come out of reviewing your general reconciliation report. Okay, so how do you generate them? How do you prepare for this reconciliation process? At a very high level, there's just 3 pieces of information we believe you need for the reconciliation process. One, of course, determining the reconciliation date. So what does that term end? Or what is the reconciliation on a specific date? And for all information prior to that date. Okay? You're basically saying, as of this date, this is what my reconciliation truth is. Step 2 is knowing your financial institution's statement, sure, balance statement as per your bank. This you may be able to get from, as I said, the paper statements that you receive, or you can go download them if you have online banking on a monthly basis. Whatever is your bank balance, that's what you would enter into this step 2. And step 3 is now comparing, and this is the most critical task, comparing the financial transactions between your bank and your own system of record. And there's 2 critical elements, or I would say 3 critical data elements in this financial transaction that really define this financial transaction. One is the date, and that's very important. When did this financial transaction take place as per both these systems? So you have a bank that has a financial date when this transaction occurred. You deposit the check today. It's a Friday afternoon. You may write it down on your system of record as Friday, but for all bank reasons, the money may have not yet reflected as a deposit till Monday, and hence you already see when you compare that deposit, there's a difference between the dates. On one side, you may have recorded this within your own date. We've gotten to this point where you really don't know the date anymore. That's sad. Between 17th and the 20th. Okay, so that's a good example where you may have had the deposit in your own system record as the 17th of December, whereas when you come to reconcile, let's say on the 23rd of December, you would see it's only till the 20th that the bank has stated. So date is a critical data element as part of that financial transaction. Number 2, which is very important for yourself, is the description, the reason behind the financial transaction. Now this is where your system of record becomes very important to help you and aid you in providing more justification, more reasoning towards what that transaction was. You cannot expect the bank to give you that explanation. The bank would simply say a random characterized variable which says this is, deposited **** something, right? Some financial institutions may be smart enough to give you some data, but it's not going to go to the point of telling you which client and file number it was for, unless you found a way to enter it, which is very rare within the bank. So the bank is really not going to justify the reason behind this financial transaction. This needs to come from your own system of record. So when you enter that deposit, making it a point to either finding a system that allows you to type it in, or using an Excel sheet or a manual book where you can type the description is critical. So knowing what that transaction was about makes it even more meaningful when you are doing this reconciliation process. And the third important component of that Good afternoon. I'm just joining back. I'm not sure what happened right there, but I was just kicked out of my own conference. But I hope you can hear me okay. And I would kindly request if you could use the chat window to share if you're able to hear me and if you're part of the webinar still. So thank you so much for that help. So, awesome. Okay, where we left off is really understanding as the fourth data element of whether it's money deposited into this account, whether trust or general, or money coming out of trust or general. But from your perspective, from your own legal firm's perspective, just think about money being coming in, deposit, money leaving the bank account, withdrawal, right? Because what's a debit for the bank is a credit for you. What's a credit for you, and it's vice versa. What's a credit for the bank is a debit for you. It's being deposited. I'm sure you've heard of this term of in the old school days, the companies used to say, or the HR would say, hey, your salary has been credited, right? And it's confusing when you have a credit card, and it really doesn't make sense. But it's credited from a perspective of the bank, because every time money is into the bank, it's their credit because it's their responsibility to manage that money because it's not theirs, it's yours. But from your perspective, it's a deposit. Anyways, that's some side story there. Just think about money coming in, money leaving. Very simple. So now you have these four elements of the financial transactions, and now you're comparing between your bank and what you have system of record. And this is where you're going to catch if there are any differences, those differences that we discussed before. This is where you'll catch them. For example, you might see a bank statement and it actually has a financial transaction, but you're not able to see it here in your own system of record. So what you see, and when you compare those two, then you have to do some homework. You can maybe think about why is that system of record showing one less transaction. Maybe you failed to go enter it into the system, then it's easy peasy because just go into your system record, enter that deposit, for example, as a retainer, and that transaction will now show up. It would match against the bank. That was a very simple example, but it can get convoluted. And that convolution is a direct resultant of how long you procrastinate from doing this. The closer you are to certain dates, if you're able to do this on a more regular basis, you're removing the chances of increasing the complexity, for lack of a better term. But if you leave this going, and if you have not reconciled your trust or your general over many months, then you're adding to the complexity of your own process of reconciliation. Sometimes you get mentally tired thinking about it, and you don't want to do this anymore, it's boring, it's irritating, then you're looking for a magic pill to help you with 12 months of reconciliation. That sometimes doesn't happen. Okay, so if you really want to help yourself, and the reason we talk about this today is, of course, you may have to reconcile and catch up for 2021, but if you are starting your financial year as your calendar year, then building that discipline, as hard as it may seem early on, it's a habit that you can develop real quick, and with the advent of technology and the tools that you have today, they're able to almost institutionalize that discipline across your firm faster, easier, and convenient for everyone involved. Okay? So reconciliation process, you have your date, the date of reconciliation, the bank balance as of that date. So as of 17th of December, what's my bank balance? I need to know that to be entered. And as of 17th of December, give me all the transactions that I have not yet reconciled between my system record and my bank. So this is the one place where you have to look at two documents. Sometimes we recommend legal practitioners even having two screens. That's with monitors becoming that much more cheaper these days. And we're all working from home. We're all having space for our own little home office. It's not a bad idea to get a couple of screens. Makes it easier to compare your bank statements. And it is the same process for your general reconciliation as well. The date, the bank balance, and looking at all your financial transactions. Now, the nature, the description, the purpose will differ. In the trust, you may have a retainer. In your general account, you may have, client payment. In the trust, you may have a disbursement. In your general, you may have disbursements plus office expenses. So really the nature of the transaction may vary, but the process of reconciling and the data elements that are involved while reconciling are the same. Okay? And I may have touched upon this earlier too, but just to give you a bit of context, what we believe is the reconciliation process can, if done right, make you audit proof. Okay, and that's a bold statement, but at least let's look at the first element of reconciliation. A very simple aspect of reconciliation, as per design in itself, was to fundamentally look at two issues that you can very readily take care of. Okay, the first is, are all the transactions in your bank or your financial institution match with the transactions that you have written down in some system of record? Okay, so comparing the bank with your system of record. It's there in the bank, it's not in your system of record. The other way around. It's there in the system of record, it's not in the bank. You may have two different directions to take depending on what you discover. But first, knowing what's not available and where it's not available is what that's the first step. Only when you're reconciling are you even thinking about that, right? And that's the fundamental step. Now, some of the byproducts or advantages of doing this on a more regular basis. Number one, I'm sure you agree with me on this, is your system, your accounting system or your accounting information is now kept up to date. So when you reconcile till the end of a certain time period, what it really means is that you have now compared, contrasted, and confidently understood and stamped the differences between your bank and your system of record, and you have acknowledged what that end reconciliation balance looks like, and you've compared the two systems. You've also provided, as a trust reconciliation, the trust listing. So you confidently know if you have $2,000 in your trust account, that it came from Peter Piper's $1,000, John's $500, and Mary's $500. So you have three clients who have contributed with their balances, and that's why you have the $2,000. And that's what the auditors want. Like, where did you get this money? Why is there $2,000 in your trust account? So you being able to confidently say, hey, it's from 1,000 here, 500 here, 500 here. That's where it is. That's important. That's where you're audit ready, because now you are very confident about the numbers and why they exist. Now, when you're doing your general reconciliation, in many ways you're already ready for your CRA, or you're filing your taxes with the revenue agency. And why? Because there's two components to taxes. One, of course, is your business tax. And that's where we're focused on, and you should be focused fundamentally as a business owner to begin with, right? So filing taxes really around your business income. So how much of revenue did your business make? How much of expenses did your business incur? The difference gives you a number, and there's a certain tax associated with that profit or loss. If there's loss, then you don't pay. If it's a profit, there's a certain percentage on that profit that you got to pay as tax. When you reconcile your general account, as I mentioned before, you pretty much know your P&L on a monthly basis. So if your profit is $100 every month, and I know it's a very bad example. Let me give you a great example. It's $10,000 a month. Then it's a $120,000 profit for that year, and you pay a certain percentage of that profit as your tax. Of course, we'll get to, income tax, personal income tax as well. For some solo practitioners, it may also mean that's kind of your direct personal income tax calculation too, in many ways, right? So very important from that aspect. In many ways, it's a double whammy effect, both from a legal law society's perspective, reconciliation, audit, you're taken care of. If you're doing a reconciliation process, you're kind of taking care of your own business and personal income tax situation. So I'm really selling this whole reconciliation process today. Now, at a particular time, just like Maslow's theory, everything becomes that much more important given stages. Right? When you don't have shelter, you really don't care for a fancy car. You kind of really have to grow up the ladder like that. Right? So at the time when you're really running out of revenue, you really don't care for reconciliation. You're not looking for the top paying customer. You're not looking at the worst expense you have as a business. Maybe your mind is not focused. But at a particular time, you should get to a point where you start focusing on it so that you can be better at it. You have to learn the game to be better at the game. So now is the time when you do your reconciliation process. Since the numbers are so pristine and so accurate, it's a great way for you to run, data analytics on it. And it's a big term, but it's really reviewing the data, because that tells you the truth. It tells you the truth of where are you getting your revenue from? Where's the money coming in? Is it small claims? Is it family? Is it criminal matters? Where is the revenue coming from? It's important that you have a plan to understand this. And if you are getting a lot of money from the criminal matters that you're generating, then look at the next piece of information, which is who is sending you all these clients? Is it this wonderful marketing effort that you're putting in, which means kudos because you're getting organic leads, which means you can be confident that if you do better at marketing, it's working to begin with, but if you put more money and fuel into it, that's going to translate to more leads. If you're getting it from word of mouth, then as your end of your bargain, are you paying back or some way of thanking the referrals? Whether you pay money, that sometimes becomes a bit touchy. So however you want to thank the person who's referring you, understanding that, maybe there's a referral channel. So maybe you have referral programs. Maybe you're working with other businesses who are sending your business your way. So ensuring that you understand first where the revenue is coming from, what's your lead source so that you can be better at it. And also looking at your expenses. We've seen this in the past with some of our clients where we've helped them reduce the amount of expenses by simply showing them where these expenses are going. Every time you do a certain type of international transfer, you're paying a high fee to the bank. So maybe you want to think about a different route of sending money over. Simple things like that can come out of you reconciling, because the expenses, the money that's left your bank, you accounted for. Through that reconciliation process, let's say you have $80 coming out of your bank. In the description, hopefully you've entered what that $80 was for. It all accumulates, and a system record can show you expense categories. So you get maximum impact for your business by evaluating the data, and a reconciled data is filtered oil, getting rid of all the dust and sediments. It's more pure. I know that's a very stupid example, but nothing came to my mind right away. But just think about reconciled data just being audited, filtered data that has your stamp on it. It's not random. It's already been approved for. And the last, and this is something I've done now for almost 14 years, been selling legal accounting in terms of a concept, trying to sell the need for reconciliation, and sometimes just talking to myself in these YouTube webinars. But it comes with a big tag of peace of mind when we help our clients reconcile their statements. I mean, yes, there are all these wonderful things that I spoke about, but there's just little peace of mind, a little smile, there's a little moment that we find, and that's very critical, because when you have that peace of mind, I think you can be more zen at working through the problems that we all have day in and day out. And as you said, audit readiness is a big peace of mind. It gives you that confidence. It's like that student who's really done well in studying for an exam and has done well in the exam, looking confident in front of a teacher. It's almost that feeling, right? So reconciliation, when done right, both for trust and general, has this double whammy effect. Okay. And are you audit ready if you've done your reconciliation? And absolutely yes. As I think you can read here. And the reason for the confidence is, again, understanding the audit process. The audit process, again, is just for you to showcase what you've done with your financial data in that term. Okay? So again, it's definitely not to catch you on the wrong foot. If it so happened that you've been doing it the wrong way, then of course it's going to be a bit of a bad show. But hopefully you can learn from that and do better at it. But by design, it was not to catch you on the wrong foot, but to lead you in the right way. If I can be very politically correct about my statement. Of course, if you haven't got your records on track, that's the iffy part about it. But really, don't blame the system. Find ways to maybe get yourself aligned with what's expected, know what's expected, and then you'll be okay. Because what the audit requirement states is that you are able to produce these set of documents. They're not asking for your house statements. They're not asking for your mortgage statements. None of that. They're set documents. Not that they can, but I'm just saying. They're set documents that are being asked for in an audit, right? So what they want is your ledgers. And if you have a trust and general, then please show them both. Journals. And there are 4 out of those journals, so 2 plus 4 is 6. And there are certain jurisdictional documents depending on the province. If you're in Ontario, be prepared to have a list of Form 9As if you have done any electronic transmittal of data from trust to general. If you haven't, there's no need for it. So it always is certain documents are situational based, but at least prepare for your ledgers and journals. Those are 6 documents. And comes the last 2 documents, most important, are the trust and general reconciliation report, which is everything that I've been talking about today. So at a minimum, there's about 8 documents. Well, if you don't have a trust account, then of course don't worry about trust at all, right? But if you have trust in general, then you're looking at 8 documents. It's pretty much what you have to worry about on a monthly basis. And it's the same template. The data is going to change because the financial transactions and the nature of it are going to change, The dates are going to change, the amount is going to change. But it's the same rinse and repeat template of what's required to show for in that template, right? January does not have a separate template. February does not have a separate template. It's the same. So once you've reconciled, the reason why we talk of audit readiness is if you have the right system of record products, such as a legal accounting system. I'm not selling any one specific one. There are many today that you should review and look at. But these systems are now ready to give you the report once you've reconciled it. The system of record is not going to be able to validate whether, if you have that check that you've not deposited it in your pocket, no matter how expensive, whether it's from US, Canada, out of the world, no system is really going to know that. It's going to know only when you do the reconciliation process and tell it that you're in the process of comparing, and then the system will know, right? So it's really your priority to tell any system record the data behind it. But once the data is in, these systems are kind of purpose-built to give you specific reports such as ledgers, journals, and the reconciliation documents. And many times, if you have the reconciliations done, you can generate these documents by just date ranging them even prior to an audit. Because I think the audit does give you a few days to prepare yourself. So as long as you've done the reconciliation process, compared financial transactions close to when it's happened. So for a month of December, reconcile in December. Don't wait till February. Because sometimes you may forget what the heck happened in December. You may forget the reason behind the anomalies, right? So if it's happened in December, take care of it right away. Creating these documents that are needed for the report is a kind of a happy byproduct of a good system of record. Okay. So that's the importance of those 8 documents is from a financial, let me rephrase that, from a legal, accounting, audit checklist, very critical. Let's say you have all of that in place, then just so to test the cadence of your business, the auditors may ask for some additional documents outside of those 8. And this is all well documented. If you can Google them or go into your Law Society's portal, you will find that these requirements are well documented. So you really should know what you're getting into. Starting with, of course, ensuring that you have a proper retainer document. If you are using trust, sometimes the auditor may ask you to review your retainer document because there's kind of a need for some clarity in that document, and it's an important compliance component. We've covered that in our previous webinar, which is also a CPD session called Everything Practice Management. You can check that out in our YouTube channel. Okay, so ensuring that you have the proper fee structure or handling retainer as part of your client service and communication, ensuring that you're generating invoices and doing the proper trust transfers as per the agreed retainer agreement, ensuring that you are able to organize the payment schedules from your clients through invoice balance checks, moving money from trust to general in a compliant manner, Form 9As, trust transfers. If you're getting into paying into general, of course, keep a tab of deposit slips, especially if you're dealing with a lot of cash. And if you are dealing with the trust account, as I mentioned before, we go back to our 8 documents, 2 ledgers, 4 journals, the 2 reconciliation documents. And last but not the least, preparing yourself for your taxes, business, personal, and you're all set. This is something that's expected out of you every year. And if you're a seasoned campaigner, you know what to expect, right? And what's important for you to think about is the amount of time in today's day and age is really thinking about efficiency from a perspective of how much of time am I putting into certain tasks that haven't changed in its output? So if the output hasn't really changed, the only thing you can do is the amount of input you're putting in to getting that output. So if you spend 8 hours a month to do your reconciliation process and it's the same 8 documents, then next year how you can help yourself is finding a combination of efficiency in process, discipline, and maybe some tools. Even a new phone sometimes helps. Just finding that right combination of process systems that can hopefully reduce the 8 hours per month to maybe 4 hours. And then subsequent year, however low it can get to, but there's always time that you need to spend, right? And from a practice management system, of course, there are some critical guidelines in terms of the right tools that you have to capture the data. We always talk about a very important prerequisite to all of this is you having a system in place, combination of discipline across your business to capture the data and the moment as and when it happens. So if you just got a retainer, find a way to write that into your system record right away. As technology improves, you're starting to see legal accounting systems also have a practice management component to them. So when you capture a retainer, you're capturing a retainer from a practice management standpoint on your phone, but behind the scene, the same system is recording it as a ledger entry into your trust account, right? It's getting it as a deposit into your trust account, which automatically reflects in your reconciliation bucket when you're ready to do it. And it's as simple as that. And that's exactly what I was talking about. We come to our final slide here. It talks about benefits of legal accounting system. If you're a legal practitioner in Canada, compliance is very critical for you to keep in mind. It's not going away. At least we don't think it is. Hence, the expectation from the different provincial systems are well drafted, and they may make changes to it as times evolve, but you are well aware of it and are given ample time to hopefully adapt and change. You have leading financial institutions today in Canada that enable online banking, so reducing the time. So you're not waiting for paper. You don't have to walk to a bank or necessarily to do business. You can do it online or the phone. So that convenience is already there. You are starting to provide conveniences to your own clients by providing online payments, electronic signatures, no real estate offices, there's virtual offices, there's so much of conveniences that are being offered to you and you offer, and legal accounting software offers that same convenience from a compliance and data entry perspective. Legal accounting software is also going to provide you the data to sometimes make meaningful business decisions. Legal accounting software was never meant to do marketing for you. It was never meant to receive phone calls. It was purpose-built to cater to the needs of law society's compliance as well as your CRA's compliance. And I talk from the standpoint of Canada. Of course, you could have software that's adaptable across different geographical regions as well, and the different revenue agencies. But it comes down to compliance, accountability, ease of use, and sometimes also comes down to cost of ownership, right? Not just the per month cost. So what's the total cost of ownership? What's the flexibility involved? The tangibles and intangibles. So as you step into 2022, review your current process, no matter what system you have, find ways that you can improve your efficiencies, be thoroughly aware of what's expected, and if you have some data to catch up, then bite the bullet, do it, and work towards getting into that peace of mind state at all times. One little tip, we often talk about using the 23rd as a date for you to reconcile or review your reconciliation. So worst come worst, you still have a week when you can make the corrections needed for that month end. So hopefully you can pick on that little tip. This slide, of course, is slightly old, and we had to stick to it because it's a certain approved slide share. But you can see for how long we've been doing this presentation. But LSO, British Columbia, New Brunswick, all the provinces have well-drafted documentation on the expectation on your bookkeeping compliance, and how audit and trust and general reconciliations are a critical aspect of that audit process. Okay? So, with pretty much no time left, I want to encourage you to visit our website to learn more about uLawPractice. If you are a current user, right under Help, you have your audit guide, your compliance guide as well. I think that was one of the questions. So you have your compliance checklist that tells you everything that you need to keep a tab of. It has also your audit guide that tells you exactly that checklist that I was talking about, a little bit more elaborate at that. So different components of it. So you've got your practice review, your technology review, your time management, financial review. So you have all of that under Help. And reconciliation is a breeze in uLaw, and you should look at all other legal accounting softwares to compare and contrast it for yourself. It's just a click of a button, so generating a trust ledger for, let's say, the month ending November. It's just a matter of clicking the download button. Okay? And you have the reconciliation documents right away available that allows you to compare and contrast. And you can see these are all the transactions that are still unreconciled for this trust account. Now all you have to do is look at the bank, change the bank date as it's meaningful to you. This is something you should do before the end of the year and help yourself be reconciled for this 2021. Comparing and contrasting, so I'm looking at today's date as my date of reconciliation. I'm putting my bank balance in. That should give you the confidence to reconcile. We go one step further. If you don't want to reconcile, you can still preview. So this is where you can do it on a weekly basis and then wait till the end of the month to generate a single document. Or you can generate reconciliation reports on a weekly basis and have 4 reports per month. There's no harm in that. Okay? I know I've gone past my 3 p.m., so I sincerely thank you for participating. If you have further questions regarding this webinar, please do reach out to support@uLawPractice.com. I'll put that in the chat. Hopefully this was your time well spent. For those who did join us throughout this year, we thank you so much for your partnership and friendship. We wish you the very best as you step into the new year. I hope we all come out once again safe and successful out of whatever variants that we're putting against. And I look forward to speaking with you in 2022. Once again, you can review our YouTube channel and look at uLawPractice and webinars to look at more CPD sessions that we've conducted over this past year, or others as well. And wishing you happy holidays, a fantastic year ahead. Please stay safe, stay happy, and stay compliant. Thank you.